And I see that it's 9:30.
Okay, good morning. We'll call the Western Water Regular Board Meeting to order March 4th at 9:30 a.m. Ms. Ford, may we have roll call, please?
Yes, thank you. Good morning. Director Gardner.
I am here.
Director Torres. Here. Director Dinstedt. Director Rizvi.
Good morning, I'm here.
Good morning. President Roten.
And I also am here. Good morning.
Good morning. Thank you. President Roten, you do have a quorum today.
Okay. I would like to invite Jesse Mobley, Operations Technician 4. You guys always give me these Roman numerals, and I have to go way back in my head to what those are. I think that's right.
That's correct.
Okay. Construction Collections Operations Department.
Yes.
Good morning.
Good morning.
Can you tell us a little bit about yourself?
Yeah, my name is Jesse Mobley. Been with the district almost 10 years in a couple weeks. Work with the construction, kind of worked with all the departments. So, yeah, happy to be here.
Very good.
Excellent. All right, let's begin. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you.
Thank you.
Thank you, Jesse. That 4 is important to him.
Yeah, I bet. I
He likes
bet.
that a lot better than 1. Jesse is in our construction crew, and when we have big failures, there's certain people that are down there welding the pipes and making sure it all gets fixed right in all conditions in the middle of the night, cold,
Nice.
hot. His team and Jesse do a fantastic job for our customers.
Very good. All right. We will, excuse me, move on to public comments. Do we have any this morning?
President Roten, I have not received any public comments in writing nor requests to speak today.
Okay, thank you. And now we can go to presentations, sites, reservoir, project update.
Well, we have a special guest today.
Yeah.
Jerry Brown has come down to join us. Thank you, Jerry. Jerry's the director of the site's Reservoir Authority, and we've been working with him for a long time. We've been up to see it. It's great to have him down here. He's going to do a presentation on where we are, what it is, where we are, but then he's also going to stick around for our meeting later today, which is with the Water Alliance at the end of the day, and he's going to do the same presentation and talk to the Alliance group later today.
Nice. Okay. Welcome.
Thank you. Thank you, Madam Chair, members of the board, general managers, members of the staff, members of the public. Appreciate the opportunity to be here today to talk to you about the Sites Reservoir Project. It's been a long time in the making, but I'm happy to kind of summarily report that we are making fantastic progress, and we are on the precipice of a major milestone. Very soon we expect to get our water right, which if you think about it, California hasn't issued a water right of this scale for 5 decades. And so we're a little rusty in our abilities to do that, but we're getting there, and we're waiting anxiously for that big milestone. But you know, one of the things I wanted to say before I go into my presentation is that big projects like this are not necessarily measured just by milestones. They're actually measured by inch stones. And when you're in the trenches, you look for inch stones and you look for progress.
I love it.
And those inches need to be forward marching inches, not backward marching inches. And I'll tell you what, the team that the authority has put together is fantastic, and it's because of hardworking people. And I see your statement under your name here, Powered by Water, Driven by Service. That's really, to a large extent, a lot of us in the water industry, and I appreciate seeing that here today. So, you know, I always like to start these discussions with a very broad question of what problem is it that the Sites Project is trying to solve. You've probably heard me say this before. You've probably heard this before, that we're going to lose 10% of our supplies over the next 20 years. That is a major issue for all of us in California, and it is a serious issue if we want to try to maintain our current way of life. and provide for future generations to enjoy the same standards. We've got to do something, and what's been laid out here in the governor's water supply strategy from August of 2022 really describes the opportunities that we have, and Sites Reservoir fits squarely in this one, expanding or above ground or below ground storage. And really, I think the point here that I like to emphasize is that it's not just above ground storage we need below ground storage, but below ground storage by itself also doesn't solve the problem, because we can't capture the water fast enough. And this year is a really interesting measure of why we need sites. You know, we've gotten quite a bit of precipitation up north, and I think down here you've gotten quite a bit as well, but a lot of that's come as rain, and we're still short on the snowpack. And that snowpack really does represent a storage of water for us, and it helps us kind of weather our 6 months of drought that we generally have in California across the year. And without it, we're lost. We're lost. Our system is not really prepared for more precipitation, less snow, and something like a Sites Reservoir is going to help us get prepared. We've been doing computer simulations of the operations if we had it today. And this is an illustration of that output for this year. And to the left, you see over the last 4 years what the reservoir could have stored. This is new water supply that would be stored for use in California, and it's substantial. And this is the message we've taken to the Water Board as we've continued to try to progress on our receipt of a water right, is that there is unappropriated available water out there that can be provided can be stored in the wetter times for use in the drier times. And that's exactly what the Sites Reservoir is intended to do. This is meant to give you a summary of where we are on different aspects of the project on a very high level. Just a couple things to note here. Contractor selection, you may have heard about some controversy that we've had recently about our selection of a Barnard Construction Company, a Montana-based builder, to build our dams. We went through an extensive process, as you guys do on all of your procurements, full objectivity, technical rigor, and the conclusion was Barnard was the best suited for this project. And that has turned some of the carpenters union in the Northern California area a little bit, because they're not seen by that union as a well-suited carpenter-friendly contractor, even though they have worked with carpenters. And they're doing work, by the way, down here in LA for LADWP right now, another $50 million job, not a dam job, but another job under a PLA for working with the carpenter. So it's a little bit of a controversy right now, but it will settle and it will move on. We're formulating a PLA right now that involves all of the unions and the construction builder. This is our current allocation of our participation in the project. This is important because it shows the diversity, 22 water districts that are all participating from across the state in the project. The largest of which is Metropolitan Water District at 22% of the project. I know that's very familiar to you all. But also the state and federal government are represented here as important participants. Prop 1 is the state's participation, and the WIN Act is Reclamation's participation. So about a third is going to the state and federal government. They are participants in the project. They are not leading or directing the project, and that's a little unfamiliar to them, quite frankly, but we're working through those issues in the form of agreements and contracts that are being formulated right now. These other participants, we've always anticipated that there would be some shuffling as we get closer to the point where we have to make an investment commitment, and we're very close to that point right now. And we are seeing some shifting that's identified here in the crossouts. And this is important to you because you all have been identified as a waitlist entity. And what the board has established is a process that we're going through to make these shifts and these reassignments. First to reclamation, because it's viewed that reclamation is an important player in this project, and there could be a lot of benefits with reclamation having a bigger share. And actually, the 9%, they're anticipating getting to 16%. So that's how kind of the first level goes. And then after that, and any shuffling between the existing participants, then we open it up to the wait list and we move forward with that activation. And there's a prioritization that the board has gone through. And I'm not going to get into it right now, but you guys are definitely up there and in the mix as far as who's next and who's ready to go, and just kind of waiting in the wings. I think this is really interesting. I was a little surprised by how much of the South of Delta portion of the project is coming to Riverside County. And I just looked at the Riverside County service providers and just kind of proportioned out Met service area in this way. That's pretty significant for this project to be so large for this county. I think I was surprised by that, so wanted to make that point. I'm not going to walk through all of this, but this is the state and federal share. This is what the state and federal are looking to get out of the project. Primarily on the state side, it's ecosystem benefits. God bless you. Ecosystem benefits in the forms of delivery of water to refuges, both south of Delta and north of Delta. And then on the reclamation side, it's really working this facility in conjunction with their operation of Shasta. And that has some significant benefits because they're really hurting on the cold water deliveries to the Sacramento River, the upper stem of the Sacramento River, due to their inability to take water from different levels in the reservoir. This will allow them to take water out of sites, their water out of sites, keep the cold water backed up in Shasta so that it could be released later in the year, and that has significant salmon benefits in the river. So that's another important element here. So if reclamation used all their water for the salmon benefits and the state was all to ecosystem benefits, that'd be a third of the project for the ecosystem. Just wanted to make a point here that because of the service area that we're collecting with these 22 water districts and the fact that there are large amounts of the disadvantaged communities in our state within the service areas of those participants, this project is having a benefit to the disadvantaged communities. And this is important when we look at the priorities that have been established under Prop 1 and Prop 4 for improving service to disadvantaged communities. I hope you can appreciate that something of this scale in a county that generates about $1 billion of economy, mostly from agriculture, has 22,000 residents. Compare that to Riverside County number of residents. This is a big deal. This is a really big deal for the local community, and we've worked really hard to try to establish things that can help bring up the local community with this project, and not just for the duration of the construction, but also into the future for the next 100 years. And I just highlight some of these things because I think you can appreciate the importance and the necessity to try to keep some of like the jobs local, to keep the business, local contractors busy on this project, make sure the roads and everything are taken care of once we're all done, because these big trucks pound the roads and put potholes and needs to be repaired. And so a lot of effort has gone into making sure that the local community is taken care of as a result of this project, and that will continue into the future. This kind of talks about our contracting strategy because we're really now starting to select construction contractors. We just selected Barnard for the dams, which is a $3 billion package. We're going out very soon to select a conveyance construction manager. That's a $2 billion package. We're out right now with a $800 million mitigation package that we're seeking input from, or solicitations from providers. And so this is starting to come together, and we're basically preparing for construction while we're also trying to make sure we've got everybody lined up to make the investment commitment to get into construction. Our schedule has been updated. The good news is that we continue to be on the track of a 7-year construction period. We feel very confident in that. The bad news is that as we wait for the water right, that means everything after that gets delayed, and quite frankly, we're construction is not going to start until we have a water right. So you might have seen some quotes recently about how it costs us about $20 million every month that we have a delay in our water right, and that's what's reflected here. That's just basically escalation costs for construction. That's about $250 million per year, $20 million a month. The phasing of the project, we're not going to jump in right when we say we're starting construction and have huge amounts of yellow equipment out there moving lots of dirt, because we still have a lot of kind of preparations to undertake to get to where we can actually start moving dirt. We don't actually own all the land yet. We've bought a lot of the land, about 15% of the land, 2,200 acres right now. And that's all targeted in these critical path zones for the construction of the project, where the big dams are located, where we have to relocate the roads in the early part of the project. And over time, there'll be a phasing in of these packages and this work. We'll have a peak period here in about 2030 through 2032, where there'll be close to 2,000 people out at the work site performing work. We'll be spending over $100 million a month on construction, and we're just kind of gearing up for all that right now and making sure that we're on the right track. One point I wanted to go back to, land. A lot of people ask us, why haven't you bought all the land? You need all the land. You have to have the land to build the reservoir. That's absolutely true. We need about 15,000 acres, but this project has been on the books for a long time, since the 50s, and if you go even further back, you can. But it's been on the books since the 50s. It's not gotten built for a lot of different reasons. But there's been people that have lived out there in that valley for that period of time and are still living out there today. And they're just fatigued by this on again, off again. We're going to build the project. No, we're not. And so what the board said was, we're not going to put people through that until we know we're going to build this project, which we will know when we have commitments to go into construction. That's when we're going to activate. And I think it's actually turned out better for us, because the people have been very cooperative. All of our purchases to date have been willing seller, willing buyer framework. We are getting access from parties right now to do our environmental surveys that are necessary to precede the construction work. All but one gentleman, we've had to go to court to get court mandated access, but all of the others have given us access freely and welcoming it. And so, you know, you're always going to have something out there that could be an outlier, but generally speaking, the landowners are very supportive of the project and very much waiting and wanting this to happen. And so that's why I mentioned at the very outset, we're on the precipice of this big milestone. It's going to trigger us to kind of activate a lot of things that have just been lying in wait.
Can I ask you a quick question on
course.
the project is made up of 20 discrete large sub-projects. Is that like because of the phasing of
Correct.
project?
Yeah,
Oh, okay.
exactly. And yeah, the progress of the activity, generally speaking, it follows. You have to relocate your roads first. You got to build the big dams. You've got to build the kind of perimeter dams. You got to build the pump stations and the pipelines to get the water in and out. And that's primarily the phasing that
Okay.
is set to occur.
Okay, great. Thank you.
On the funding, we continue to be in the mix for the WIFIA loan that I've spoken to you about, $3.8 billion WIFIA loan. This is a huge loan even for the WIFIA program. And I think you guys have gotten WIFIA before, haven't you? Yeah. So you're familiar with the program. And between that and the USDA loan and bonds and cash that we are going to be bringing in, that's going to be how the participants are funding the project. So this will all be like a pooled financing in essence that will be then paid off through debt service over 40 years. The state and federal government, they're shown here at about a quarter, but as their participation goes up, particularly for the federal government, as their participation goes up, then their share of the project costs will also be increasing. So they'll get to be about a third once reclamation gets to the 16% that they desire. And this is just meant to be a kind of an overall schedule look. We're now kind of waiting for the water right to get into what we call investor commitment. It's a 6-month period where each of the water districts will have their opportunity to go to their boards and get authorization to sign a contract that obligates them to pay for their share of the debt in exchange for receiving their share of the benefits. And once we have all that, the last decider will be the state. The Water Commission will make a decision to proceed, hopefully, with the project, seeing that there's 100% participation for all other elements, and then we'll be off and running into construction for that 7-year period, ending about the end of 2033. The last thing I like to remind people to get your head in the right mind space here of what we're doing. This is a generational investment that has significant implications for future generations. And I've done a lot of research on all these various projects across our state as to big projects that have gotten done, water projects, and all of them have been questioned extensively. You know, you see headlines over and over again in the newspaper reports on them, and this is just a few of those reportings. They've all been questioned. So there's nothing wrong with questioning the project, this project. It's actually healthy. It's actually making the project better. But they have all, I would say, in my opinion, been done and had no regrets. We are all blessed with the fact that the people that came before us made the decision, the hard decisions, to go forward with these things. And it's because of those decisions that we've got what we've got. So now I like to say to people, it's our turn. It's our turn to do something for that future generation of the people that are going to be here long after we're gone, and whose shade we shall never set. The tree, we need to grow that tree. We need to plant that tree and grow that tree so that those folks have what we've been able to enjoy for our lifetime. Thank you. That concludes my presentation. I'm happy to answer any questions.
Thank you so much. Any questions? Anybody? Comment? Mm-hmm.
So, in the slide where, I think it's the second last slide, it says investor commitment. Is it the rest of the water? Is it, who are the what are we talking about as an investor commitment?
Yeah, good question. Thank you. We are, in order to proceed, everybody has to sign a contract independently on their own, and it's the 22 water districts that are all participating in the project, plus the state government and federal government. So all of us collectively, 24 contracts, form the basis of the participation in the project. And all of those represent the investor commitment, because those are in essence saying, we commit to paying our share of the project costs in exchange for getting our share of the benefits.
Thank you so much.
Okay. I think we're good. Oh, no, we're not good.
Hi, Jerry. Thanks
Hi.
for being here today. Appreciate it.
Thank you.
I'm still waiting for your presentation to be done at Metropolitan. So hopefully one of these days we'll get you up there to do this presentation, because I think it's really important for people to see, you know, the progress that you've made, where you're at, what the funding mechanisms are, what the participation level is. And I think that's a really interesting stat for north versus south over the water, and what's coming out here for Riverside. That's a really interesting stat that I haven't seen before. I've been to the project site a number of times to
Yeah.
play visits. I take my state water project trip tour folks have gone up there a number of times when we visit. So I hope you guys find that helpful for us to drop in on you and take a tour of the site and look at what your challenges are and look at those types of things. Question for you, do you have any footage of the actual site that you've shot with, say, for instance, a drone or something to record video of kind of the project area so that people can kind of wrap their heads around the enormity of what it is that you're looking at?
We have. We've got a couple videos like that, and we'd be happy to share where those are with your staff and make sure those are made available to the board members. Yes,
Yeah.
we do.
I think it's just a really good thing for us to continue to message to the public what we're looking at and what we're in support of. You know, that this is something that's definitely on our radar, and we sit on the wait list. Any idea of when you're going to have a 100% idea of who may be able to move off of the wait list and into a slot? Has there been any indications from any parties they're wavering on their participation levels?
Yes,
Okay,
and yes, we have an idea, and I would say it's probably going to occur within the next 3 or 4 months, the first phase. So we've kind of got it set up in 2 phases. First is when we start the investor commitment, we'll know whether we have 100% with our existing participants, and then we go to the wait list at that juncture. That's our first round of initiating the wait list. And then we go about 3 months into the investor commitment and we see where the actual decisions are, and we say, okay, do we have more? That's when we would activate a second round. So I'd say within the next 3 to 6 months. And this assumes, of course, the water right pops out any day now.
okay. All right, well, nope, that's good to know, so.
Yeah.
But thank you for being here today, appreciate it.
Yeah, thank you. Thanks for coming up there. It does help. It helps a lot. 13 miles long, 3 miles wide is how big the reservoir is. And you don't really appreciate the scale until you stand out there in
Yeah.
the middle of the area.
For sure, for sure, thank you.
Is there anything that we can do as a board or as an agency to help push along the water rights process? Hey, I have to ask.
It's a good question, and I mean, my board is frustrated, to be frank, with the duration, and I try to hold them back because these are people making very difficult, intricate decisions that we need to respect their process to the extent we can. I mean, you've got to balance, you know, being respectful to, it's costing us $20 million a month. So we wrote a letter to the state board a couple weeks ago identifying some of these kind of domino effects from the delay. The Water Commission wrote a letter after that to the state board. So there's been some initiation of contact with the board through these communications. Right now, we're in ex parte. We can't talk to anybody about anything. But we just wanted to make sure the board was aware and the staff were aware that there are ramifications of continued delay. And we trust that they are going to balance their process with that ramifications, and we'll see what happens. I would say if it continues for another couple months, there's probably going to be a ramp up. And that's
So
when there
you'll let
might be
us
some activation of other parties.
Okay, so you'll let us know that, and, yeah, because I'm thinking that where do they think that $20 million a month is coming from? It's coming from everybody, the agencies, the taxpayer, at the state level, at the Fed, I mean, all of it. And, wow, I mean, that alone, I would think, would help to share the expediency of getting these rights, but that's just me.
Well, that and the governor is very supportive of this project and has made that very publicly known and continues to make that publicly known. In fact, the recent announcement about the California Water Plan update, he talked about the need for capturing this water and storing it for dry times, and Sites Reservoir will do that for us. So he's right there pushing as well.
Okay.
I have a question.
right.
Laura. I have a question.
You're pushing?
I have a question.
Oh, you have a question? Oh,
If the board's done with their
Of
questions before
course.
we say goodbye.
yes.
Well, I don't want to jinx anything, but I think you're doing great on water rights. It took this agency 17 years to get water rights settled on the Santa Ana River, so this is a very hard process, and there's a lot that goes into it, and unfortunately, ex parte is really significant, so you can't really talk to the state board about the issue. But Jerry, one of the things that you and I have talked about before is there's been quite a bit of misinformation disseminated by some people about the ability to actually get the water south of the delta. And, you know, I've heard people say, well, we won't get any water out of the site's reservoir after we invest in it, which is not true at all. But I would like to hear you address that with the board so we can really, you know, get the true story and be able to push back on some, you know, some of this rhetoric that comes up, because it's not true and it's damaging to the support for the project.
Yeah, it's actually, I think it's based on a misunderstanding of a very complex system that has a lot of elements to it that a lot of the conversation we've been having has to do with the limitations of the delta and getting water through the delta or around the delta, and unfortunately the operations of sites don't really relate to those conversations. The operations of sites really relates to what is the situation right now in the delta and how is the project operated. And right now, there is clearly a permitted and regulatory mandated period of what we call transfer window of non-project water through the delta, where export facilities, if capacity is available, which generally there is capacity available in all years, all water year types, even in the wet years, there are periods where there can be capacity available. Then water that is, quote, not part of the state or federal project can be exported. And and because of sites being this off-stream storage that can time and control the release of water, it's not an uncontrolled system. It's we open valves, it flows, and it goes into the river, and then we measure it and monitor it all the way to the export pumps. Because we can do that at certain times, and when those windows are open for transferring, that makes the water available to the parties south of Delta. And once you get it south of the export pumps, it is there. It is available to you. There's no hesitations or representations. Now the question has come up, well, what if the regulations change? What if this window goes away? Generally speaking, I can't say that there's 100% guarantee that that would never happen, but the chances are really, really good that that won't happen, because as we've understood the Delta, we've got a lot of experience there. The periods where the regulations are most critical are in the wetter periods from about January to June. That's where the periods are affecting the ability to export. So this period of July to November, December, that's a window when we know we can move water through. And actually having this fresh water, new water to be able to supply through the Delta helps freshen the Delta during those periods when it's otherwise not getting freshened by extra flow. So it's just more of a confusion point, I think, and relating the site's operations to something that is unrelatable to sites, that I think this question comes up, and I hope we can continue to talk about this and learn and understand. I know the Metropolitan staff work really hard to communicate these elements to those that are questioning. And we're happy to talk about it with anybody when it comes up, so steer them our way.
Thank you. It's obviously Metropolitan is a huge investor in the program, where they have 311,000
Yep.
acre feet. That's
Yep.
an enormous amount out of 1.5,
Yep.
is it 1.5 million?
Roughly.
So that's a big deal. So you know, as Jerry said, contracts are going to start flowing, and Metropolitan is going to have a decision shortly in front of them as to committing to the contract and the funding. And so we want to make sure, and you know, this argument's happened at Metropolitan, it's like, we got to make sure we're getting water for the funding. And then I think some people don't want the project to happen, or whatever their motives, will say things like, well, Met won't see the water, which is not true at all.
Not true.
And so, you know, I just want, you know, so that the Inland Empire to be confident that, you know, there is mechanisms to get the water here, and actually in wet years would not be the time, especially in the wet period of the wet years, that we would want the water anyway. We would want it to you know, we have lots of water when it's raining and it's wet. We would want to store it after that. So the operations would work very well for what we're doing, I think what Metropolitan be doing too. So
Yeah.
just want to get that off of the table.
Thanks. Yeah.
Excellent. Okay,
Okay.
thank you very
Thank
much.
you. Thank you.
Appreciate you coming all the way down
Jerry.
here.
Thank you. Happy to be here.
Okay, we will move on to the consent calendar, and I think that there was an item that someone wanted to pull.
Yes. Could we please pull 6C for a brief overview, and I have just a couple of questions.
Okay. Were there any public comments up for consent?
There are not. I would suggest that we vote on the
A.
remainder of the
Oh,
consent calendar and then hear that item.
Okay,
I'm happy to make that motion. Second.
so this is a motion for A and B on the consent calendar. And whenever you're ready.
Director Gardner.
Aye.
Director Torres.
Yes.
Director Dinstedt.
Aye.
Director Risby.
Aye.
President Roten.
Yes.
Thank you. The motion carries 5-0 for items 6A and 6B.
Okay. Item C, adopt a resolution authorizing Western Municipal Water District to join the California Fixed Income Trust membership and to invest in shares of the trust and in individual accounts.
Yes, I can provide
Do you
that.
want a report?
So I just wanted to get a brief overview for what this is, if we could, for members of the public who might be interested in something like this. But I was curious, I didn't find anywhere where it indicated that, yes, we're going to have a vote, but who is going to be representing that vote? Is it, how are we going about doing a vote if we're on the board for this entity?
Yes, I can address that.
Thank you.
So this item is a resolution which would allow us to have an additional investment option for our short-term cash. Historically, the districts put that in LAIF, which is run by the state. Last year, the board approved an additional option, which is CAMP, which is a JPA. And we've actively used that last year to great benefit. This one would allow us to not just put everything in CAMP, so to speak. It's a very similar product to CAMP, short-term. It's another JPA, and so it has very competitive rates with the product we're currently using. But this one is administered through Chandler, so there's an additional advantage that we have, obviously, a strong relationship with Chandler, and we talk and have the ability to ask them questions more readily on their strategy and things like that. So you get the same rate, but we have more direct access to their staff. So that's where the advantage comes in, and still the same safe securities like Treasury securities from the federal government. Because it's a JPA, we would have the opportunity possibly of a staff member, probably myself, if they have another board seat open up to go for that. So it's an additional side benefit that with JPAs, we get a chance at governance when those opportunities come up. It's not a for sure thing. We have the opportunity to, as a member, to vote on certain things, or at least, and Dan's here too, he can address this, but we don't have a guaranteed board seat, but we do have an opportunity as a member to vote on basic things as a JPA.
And that's very helpful, and I'm glad to hear that, Chandler is part of that, because I guess I missed that in the read. How many entities are part of this JPA? Do you have any idea?
Currently, Dan, can you answer that one?
There are 5 board members currently, and 15 participants currently
Okay.
in the front end. Since it was launched in October, so relatively new.
Yes. So there's currently 5 board members and 15 participants.
Okay, all right, no, that's good. I think it's just for sake of transparency to know that we've done a lot of stuff with our investments to be really smart and have flexibility, and so I think it's a benefit to make sure that we have conversations about that we're thinking about that long-term, thinking about it short-term, thinking about having more flexibility, and we're not fixed on one particular path, and we're trying to be as smart as we possibly can with our assets, with our money, and how we're investing it, what we're accruing for it, all of those things, because we're not sitting on a little bit of cash. I mean, we're sitting on quite a bit, and it has a lot to do with our portfolio, our investments, our credit ratings, how we move forward with projects. It's just a lot of stuff. So I want to make sure that we're very transparent and we're talking about it. So appreciate that. And with that, that answers my questions that I had, and I'm happy to move this item.
We have a motion and a second. Any other questions? No? I think we're ready for the vote, please.
Director Gardner.
Aye.
Director Torres.
Yes.
Director Dinstedt.
Aye.
Director Risby.
Aye.
President Roten.
Yes.
Thank you. The motion carries 5-0.
Okay, we'll move on. Excuse me, to item 7. Mr. Miller, anything to be added to the agenda today?
Oh, there's nothing to add today, but we do not need the closed session.
Okay, thank you. We'll move on to item 8, action agenda. A, receive and file the investment report for the period ended December 31st, 2025. Mr. Miller?
Right,
did you-
Dan Delaney is here to give us a presentation. Dan, good to see you.
Good morning, Madam Chair, members of the board and staff. It's always a pleasure to be here. We have a lot to unpack today.
Okay.
There's a lot of issues that are front of mind. Obviously, the conflict in the Middle East is paramount. We also had an important ruling by the Supreme Court on tariffs. And another item since we last spoke is that we have a new Fed governor nominee as well that could be in the seat for the next 8 years. And so if you don't mind, I thought this morning we would rip up the script a little bit. Instead of going through the typical eco outlook, we would talk about these items. Maybe I'll start by saying that we've worked together for 25 years, and we've been through a lot of cycles, and this is potentially another one. But we build portfolios to be all-weather portfolios, to be resilient. And so we're very happy with the positioning of the portfolios, and we manage several for you now. And we're not looking to make any knee-jerk reactions to what's going on. So know that certainly to start with. So firstly, let's talk about what's going on in the Middle East. Obviously, this is a region which controls a lot of the world's oil and gas supply, very important shipping routes, and there has been already some pretty major disruptions to that supply. The market reaction has been fairly mute, to be honest. We have seen riskier assets like stocks come down. Interestingly, bonds, which are typically a safe haven, have not performed well because everyone's worried about higher oil prices and inflation, and we just went through an episode of very heightened inflation. So, bond investors are certainly wary about another bout of inflation. Mostly, we've seen the impact to oil prices. Although, interestingly, if you look at oil contracts out into the future, they haven't risen as much. So, at least for now, the market is saying we expect this to be contained, and we don't expect oil prices to rise significantly longer term. But clearly, if this becomes a more sustained campaign, that could change. I'd also say that the U.S. economy is going into this very resilient. The economy is strong. Consumers' household balance sheets are in good shape. We're also a more independent nation in terms of energy, but we're not immune. So we'll continue to see how things play out in that way. Secondly, tariffs. So we had this ruling from the Supreme Court on tariffs. Basically, all of the administration's tariffs were deemed illegal and were rescinded. Immediately after that, the administration followed up with a 15% global tariff, which it is allowed to do under Section 122 of the Trade Act. And there are more avenues for the administration to increase tariffs. So there's a lot of uncertainty right now, which is not particularly helpful for businesses or consumers regarding what the end game is with tariffs. But there are multiple levers that can still be pulled. However, I would say that the political support for that is waning. We have a big affordability issue in this country, having gone through a period of high inflation, and prices are still high. Midterms obviously approaching, so it is more likely that we see an effective tariff rate which is perhaps lower than it was before, just because there's not that political capital there to do that. Say that in terms of the tariff revenue collected and our deficit, because this was another one of the discussion points that we spoke about, Rick, it's not a huge amount. So we collected an additional 175, 180 billion of customs revenues through the higher tariff rates. That's around 3 to 4% of our annual government revenues. So in terms of helping the deficit, it's not really a huge help. And there's obviously some negative growth impacts that followed that. So the last thing I would say on the tariffs is that what the Supreme Court did not rule on was refunds to businesses, and that could take months, even years to play out in the lower courts. So you're not going to see that reversal in terms of revenues coming back to businesses or that positive fiscal impulse. So, when this came out, the bond market didn't really react much, which is probably the right way to react, because there's still a lot of uncertainty. You're not going to get a big boost to growth from refunds or more certainty over the tariffs. You could get a bit more relief from inflation, and the longer part of the bond curve, which we always talk about in terms of its reaction to the deficit situation, also didn't move that much. And of course, you can participate in that area, and so that kind of speaks to the fact that it wasn't a big part of the government collections in the first place. So the whole tariff situation, not a huge market mover, but we'll have to see how things play out certainly in terms of what comes next, what other provisions that the administration can use, and also the refund question too. The last thing I would say regarding the Fed, Kevin Warsh was nominated to be the new Fed chair when Jerome Powell steps down in May. Warsh was on the board during the great financial crisis. He was a very young governor back then, but obviously has the history. And when he was nominated, again, we looked to the bond market, which is kind of all-powerful in terms of the reaction that it gave, and it gave a pretty positive reaction. And that's what we want. We want Fed chairs to be independent, and so you saw that really in the bond market's reaction. It's very, very healthy. Obviously, you have around $300 million invested in that market, so it's very important for you. There's a couple of things that are going on right now with the Fed in terms of it being under subpoena with the DOJ for its spending on the new building. That could actually result in Jerome Powell staying on the board, which is very unusual for a former Fed chair, and perhaps the whole makeup of the Fed not tilting more dovish in favor of lower rates, which is ultimately what the administration wants. So we'll have to see, again, how things play out. I think the takeaway from a lot of this is that there's just a lot of uncertainty, which there always is, but really a higher degree right now, particularly with the conflict that is going on. That's really front and center in terms of how we're thinking about the portfolios. So what I wanted to do...
Just briefly, why would that cause him to stay?
Well, there could be a view that he is in a better position to undergo that investigation, being a part of the Fed, and having access to all the data that is there. There's another view that he might want to stay on in order to just spite the administration and not be able to put in another governor that may be more inclined to lower interest rates. So there's a lot of game theory going on at the Fed, which is not ultimately that helpful, but we do think that the Fed pick, and there were many different candidates, is a good one, and one that will be independent. And ultimately, it's a 12-person board that decides interest rate policy, so that person has to generate a consensus anyway, despite whichever way they're going to lean. So those are the three key recent events. And what I'd like to do is, when we go into the portfolio, talk a little bit about how they may impact the portfolio and how the portfolio is resilient in spite of this higher degree of uncertainty. So I'm going to skip through a few of these eco slides, and then we can kick off with the operating reserve portfolio. So this is your compliance statement as of the end of December, and you can see that you're compliant with your policy and California code across all these different parameters. Of course, we review the policy annually, and it's very much in line with industry best practices and changes to code. This is a snapshot of the portfolio as of the end of December. So the average maturity is around 4 years, and that's really important in the current environment, because if you go back to what I said about the bond market's reaction to this Middle Eastern conflict, you actually saw yields go up, whereas typically you would see yields go down and bond prices go up when there's a rush to safe haven assets. So the interest rate sensitivity of your portfolio is relatively low. You can invest out to 10 years, but your average maturity is between 3 and 4 years. So that means if we do see a sustained conflict, a sustained increase in energy prices, and a sustained increase in bond yields, your portfolio is relatively insulated because of its lower duration and lower average maturity. During the quarter, yields were down marginally, and you can see that the market value of the portfolio went up around $3 million, and that's mostly through income that you're generating now from that very healthy purchase yield. You're generating around $10 million a year now. And in terms of the securities that we bought during the quarter that we are buying, we're still buying securities over 4% yield. So you should probably expect that purchase yield, as you can see on the chart, to continue to increase and then start to level off. But you are generating this very healthy return or healthy income now, which is also an offset against some of this market volatility, that you may see the market value of the portfolio move around a bit more, but underlying that, you're generating a higher level of income that you were versus when interest rates were 0 to 1%. So fixed income is a great place to be right now in terms of defense. In terms of the allocations in the portfolio, again, when we're thinking about risks and potential recessionary scenarios, we think about credit quality. You have around 70% of this portfolio in government or government-related securities. So in terms of credit risk outside of that, it's very minimal. And that 30% in credit risk is very high quality, blue chip companies that you all know that are very resilient and have operated through various cycles over time. So we're very comfortable with the level of credit risk, which is minimal in your portfolio. And you can see some of the names here. We're very diversified always in terms of our credit exposure. We don't have any non-government entities more than 2%. The largest you can see there, Home Depot, is around 1.5%. So we did buy, as I said, some new names during the quarter at very attractive yields and very high quality in terms of their credit standing. And these are the returns for the last quarter and for the year. So, bonds just had a really stellar 2025, and they put up returns which were kind of equity-like and unlikely to repeat. But you think about where we were a few years ago, we had the worst year in 2022 for bonds. So we're cycling that. And then as we look forward, think about returns that are going to be more normal and more in line with the income that you're generating from the portfolio. So we call it coupon clipping. If you think about the next few years, you'll probably just clip a coupon. Returns will level out. They're not going to be around 7%. They'll probably be around 3 to 4%. But nonetheless, very good year in 2025 and a good relative performance as well. We always try and add value, and we outperformed the benchmark here by around 0.5%. And that outperformance compounded over 25 years is real dollars going back to the district. So very pleased there. We show the realized returns, and this is the income earned less any realized losses in the portfolio and gains. So you can see that realized return, which is a little bit lower, around 3%. But what you should expect to see is that to go higher as we start to realize more gains And then if you look over a very long period of time, and we don't have the data here because our system is relatively new that we switched to, but if you were to look over a longer period of time, you would see that the realized and the total rate of return basically converge. It all evens out. And year to date, I'll just mention the bond market is having a good year, so your portfolio is up over 1% in the last couple months. Okay, so now on to the VEBA, and we can also talk about the Section 115, but before I do that, any questions about the operating reserve portfolio? Okay, so if you'll see, I did jot down some notes because the Section 115 was funded in mid-January, so it's not going to be in this pack, but it will be in the next pack, so you'll be able to see the breakdown. But it is substantially, I should say exactly the same in terms of its asset allocation as the VEBA. So again, your compliance statement, you're compliant with all the different parameters in your policy. And this is the asset allocation. I just want to spend a bit of time on this because we spoke about this I remember with Director Gardner in the last meeting, and we spoke about risks. We spoke about risks in the equity market. We spoke about valuations being quite stretched compared to historical norms. And really our job is to preserve capital. We want to be risk managers of your funds first and foremost. Yes, we have a return target to hit, that's 7.5% annually over the long term. But there's a time to harvest gains, and there's been some very strong gains in the last 3 years, and that has culminated in valuations in the equity market being quite elevated. And so every year we come up with our asset allocation, and we look at where we see risks and value opportunities in different parts of the market, and we made a decision to reduce our equity exposure at the beginning of this year, increase our fixed income exposure, and increase our exposure to commodities, including gold. So our equity exposure has gone down by around 10%, from 55% to 45%. Our bond exposure has gone up to around 45%, and our commodity exposure has gone up to about 5%. So far, that's working out pretty well in the current markets where you've seen fixed income hold up better, stocks suffer a bit more, and commodities have done very, very well. So our goal is not to be overly active and trade this portfolio. We want to, take a long-term strategic view, but when we do see more value in the equity market, we may look to adjust these allocations. But I thought that was a very important change that we've made in the portfolio, and one that I wanted to give you. And just so you know, the Section 115, which was funded, like I said, in the middle of January, has exactly the same asset allocation. It's around 45% in equities, 45% in bonds, around 5% in real estate, and 5% in commodities. So the same allocation. And then just lastly, in terms of the returns, so our long-term goal here is to hit this 7.5% actuarial required return. And you can see that we've done that if you look over 10 years and since the inception of the portfolio. We have a benchmark. The benchmark provides some context as to what is going on in the market. The benchmark is not all that representative of what we invest in, because if you go back, to this page, we diversify a lot across different regions and sectors. This benchmark is less diversified. And again, we spoke about that at the last meeting, the fact that it is more concentrated in large cap US tech stocks. And so over the last 3 years, it's done better than our portfolio has done. However, over the longer term, we've performed relatively in line. And if you think about what's going to perform over the next few years, is it going to be tech stocks over the next 3-5 years? Perhaps, but there's already a lot priced in, which is why we shifted our allocation. So in the short term, we've also started to look at other benchmarks, and we think CalPERS and their strategies are quite a good comparison. And I can provide that information to you as well. So CalPERS runs different strategies in their retirement portfolios from lower risk to higher risk. And if you look at those, and I just jotted down some numbers, their kind of moderate risk strategy, which is a 50-50 between equities and bonds, over the last 3 years returned 10.5%. We returned 11.8%, and 4% annually over the last 5 years. We returned 6%. The higher risk strategy, which is a 70-30, which is not what your portfolio is, it's a little bit less, returned 13% over the last 3 years annually, and 6% over the last 5 years annually. So you can see, if we compare ourselves to a more representative competitor than the benchmark, that we're doing, pretty good. The same, if not a little bit better. So, this is something that we can discuss, benchmarks with other clients. It has been a topic of discussion, just because you've seen this huge outperformance in tech, which your portfolio is not that invested in. And so we need to be mindful of benchmarks and shorter term comparisons, and also, of course, stay focused on the longer term required rate of return, which like I said, we've hit. Just to give you a bit of flavor in terms of the Section 115, the performance is around 1%, plus 1% so far this year. And of course, that was amidst a very volatile market where stocks are down and bonds are kind of in the middle, and the benchmark is down around 0.2%. So again, it's holding up pretty well. So any questions on the VEBA or the Section 115 or anything that I've spoken about today in terms of markets and politics? Yeah, well, as ever, I'm optimistic, and fixed income managers are supposed to be more pessimistic, but I'm optimistic because I think there's a lot of great things going on with this economy, and hopeful that that the conflict will be shorter lived. But like I said at the start, I hope that you have confidence that the portfolios are really designed in a way for these scenarios, and are really well positioned to weather them.
Thank you. Okay, thank you. No questions? All right, thank you so much.
Thank you very much.
I'll move the item, yeah.
Okay, we have a motion and a second to receive and file the investment report for the period ending December 31st. Just before the vote, did we have any public comments?
We do not.
Okay, I think we're ready for the vote.
Director Gardner,
Aye.
Director Torres,
Yes.
Director Denstedt,
Aye.
Director Rizvi, President Roten.
Yes.
Thank you. The motion carries 5-0 to receive and file.
Thank you. Okay, we'll move on to item B, receive and file a report on the use of general district property tax revenue to offset the deficit in the combined DeSalter Enterprise Fund for fiscal year 2024-25 and allocate additional property tax funds for future use.
Thank you.
Mr. Miller,
President Roten, we had a fairly robust discussion about this at committee.
we did.
Answered a lot of questions. Hopefully we answered them well. We'll see if we get more questions today, but we're ready for it, I think. So Allison's going to present this again. Allison?
Thank you. Good morning, everyone. So in February 2023, the board authorized Western Water to execute a wholesale enterprise water agreement with Jurupa Community Services District and the cities of Norco and Corona. This agreement created a pilot program to test the flexibility of the combined DeSalter enterprise to ensure participating agencies' seasonal demands could be met. The board also authorized the use of up to $4 million in general district property tax revenue to offset any deficit the combined DeSalter Enterprise Fund experienced during the 2.5-year pilot program. Each year, we've come to the board to report the use of property tax revenue for the combined DeSalter Fund. For fiscal year 2025, $2.1 million in property tax revenue was needed to offset the deficit in the fund caused by lower than projected production and sales. With this latest use of property tax funds, the balance remaining from the initial $4 million is $374,528. For fiscal year 2025, the target delivery amount for the combined desalter enterprise was 10,070 acre-feet, and the water rate was set at $1,121 per acre-foot, based on this assumption of delivery. Unfortunately, this year, the combined desalter enterprise only produced and delivered approximately 7,500 acre-feet of water, which was 2,500 acre-feet less than the anticipated amount. This shortfall was due to one combined desalter customer not being able to take delivery of any desalter water, and other customers taking less than their projections due to lower demands. While less production meant lower operating costs, it also meant not enough revenue was collected in the rate to cover fixed costs such as asset replacement, capital, and debt service obligations. This resulted in the $2.1 million deficit for fiscal year 25. This deficit was larger than we've seen in previous years, mostly due to higher debt service obligations and asset replacement needs. The wholesale water purchase agreement and combined desalter pilot program was not extended as anticipated and expired at the end of fiscal year 25. Staff is currently working on several efforts to support the future of the combined desalter enterprise. Our engineering team is working on a project to install PFAS treatment on the Arlington desalter, and this project should alleviate the demand issues we've had with some of our combined desalter customers. The operations team is working on a system optimization study for the combined desalter to determine how to most efficiently operate the system, considering we have multiple sources of water and delivery locations. And Water Resources is working with our combined desalter wholesale customers to model their systems to better understand their demands and the bottlenecks in their system, which will help them optimize use of our combined desalter water. We expect all of these efforts to wrap up over the next several years. And during this period, Jurupa Community Services District has agreed to purchase up to our CDA allocation of 3,534 acre-feet out of the Chino desalter. Desalter water will also continue to be sold to Norco and Riverside Retail. Staff is requesting that the board authorize the use of an additional $5 million in property tax revenue to offset any deficits in the combined desalter enterprise fund through fiscal year 2028, while staff works on long-term plans for the enterprise. Property tax revenue will only be used if needed, and staff will continue to do everything possible to avoid or limit deficits in the fund. By authorizing the use of general district property tax revenue for the next 3 years, it'll help protect Riverside Retail and combined desalter customers, who are also contributors to the general district property taxes, from absorbing higher rates if deficits do occur. So staff asks that you receive and file the report on the use of general district property tax revenue to offset the deficit in the combined desalter enterprise fund for fiscal year 2025, and allocate an additional $5 million of general district property tax revenue to support the combined desalter fund through fiscal year 2028, until longer-term operational plans and agreements are in place. And I'd be happy to answer any questions.
Any comments or questions from the board? Go ahead.
My question is about the agreement with JCSD for the 34 acre feet.
Mhm.
Does that make us neutral if
Yeah,
we're purchasing that?
If they purchase all of our allocation, it'll offset all of their obligation to them.
Okay, thank you.
I would like to make a motion to approve.
Okay, we have a motion and a second. Was there any public comment for that item?
There is none.
Okay. And seeing no further discussion, may we have a roll call vote, please? Thank you, Allison.
Thank you.
Director Gardner.
Aye.
Director Torres.
Yes.
Director Dinstedt.
Aye.
Director Risby.
Aye.
President Roten.
Yes.
Thank you. The motion carries 5-0.
All righty. We'll move on to item C, adopt resolution concurring in nomination of Elsinore Valley Municipal Water District Board Member Andy Morris to the California Water Insurance Fund Board and Association of California Water Agencies Joint Powers Insurance Association, Aqua JPIA, captive insurance company. Mr. Miller.
We presented this at ComGov and had a discussion about it. Everyone was in favor of Andy, and I told the committee that we would bring a resolution as is required by Aqua to the board for approval. So willing to answer any questions?
I'm happy to move the item.
Okay, we have a motion and a second. Were there any public comments?
We have no public comment.
Okay, I think we're ready for the vote, please.
Director Gardner,
Aye.
Director Torres,
Yes.
Director Dinstedt,
Aye.
Director Risby, President Roten.
Yes.
Thank you. The motion carries 5-0.
Okay, and moving on to reports. Item 9A, General Counsel Report. Mr. Ballinger?
Good morning, Madam President. I have nothing to report this morning.
Okay. And Mr. Miller, General Manager and Staff Reports, item B.
Okay, thank you. Metropolitan's been a hot topic lately. I was up at the member agency managers meeting on Friday the 20th, talking about water supply conditions, annual operating plan, what's happening with golden mussels. This is going to be expensive. So we already fought quagga mussels. Now golden mussels is another fight on the state water system instead of the Colorado system. So you're, just think of it this way, you're kind of doubling your costs and defenses against the mussels, because now you got to do it on the state water project system. So that is a budget impact. Also got an update on Colorado River issues, so that's ongoing. You may be shocked, but it didn't get solved by Valentine's Day. They hoped that was going to be the magic day, but apparently it wasn't. So it's still going on. We, as well as most of the Met agencies, are fully embroiled in analyzing Met's budget. There's a lot of elements in the budget. We're working closely with Director Dinstedt to talk about the budget and look for efficiencies in the budget. As we've kind of been doing on big issues, is we're collaborating with a lot of other agencies to get their input on what their thoughts are. We will be talking with our caucus about it again tomorrow. As we move forward, ultimately, the approval is going to be, what, second week of April is the target from Metropolitan right now. So lots going on. You know, we're talking about how much money is in the budget for the Pure Water project and whether that's appropriate to have money in the budget for the Pure Water project, since the board hasn't actually approved the project. There are, Shivaji Deshmukh, as the new general manager, has really made it a priority to hire positions and put money in the budget to keep the system operating. So these are really fundamental core operating and engineering positions that Metropolitan is missing to just keep the system up and operating. And so I know it's going to be a goal of his to get support for those positions. However, there's some other positions in there. There's a total of 105 positions in the 2-year budget. It's a lot. Remember, they have 1,900 positions. They've been doing without some of these positions because of prior cutbacks. And so there's a lot of talk at Metropolitan by the staff about how important it is to bring some of those positions back. And as they're doing it, they're also doing a very critical evaluation of the need of those positions. It's not just, hey, they're on the paper, they're in the paperwork, so we should hire them. You know, I think they're really working hard to justify every one of those positions. I anticipate, I'm guessing, there's going to be quite a discussion about increasing ad valorem taxes at Metropolitan. There was an increase of from 0.0035 to 0.007 in the last budget, and I think there'll be discussion about increasing that some more. So we anticipate that. We're preparing for that. And then there's, you know, questions about how much money we should be spending on conservation programs right now, given that Metropolitan's demands are continuing to drop. And so do we really need a lot of money messaging conservation, since we're not selling as much water as we used to sell? So really busy. Rick and the other CFOs are doing a great job of trying to, I guess, distill down hundreds of slides and thousands of pages of budget data into the most pertinent discussion points. So we'll continue that work. As part of that, Director Denson and I both met with General Manager from Met this week, so that was great. Also, I went to the Urban Water Conference last week where he was one of the presenters and met with him out there. Also, it's a great opportunity to talk to a lot of the other Met general managers in the hallways out there. So there was a lot of budget discussions that were going on. It's obviously a very hot topic. Switching gears, SB 72 last week also, really good day for SB 72. Well, SB 72 already had its best day ever. It was signed. We still talk about it, but the important thing is the commitment that DWR is showing to implement it. And so Joel Metzger was the keynote speaker at Urban Water talking about how they're going to implement SB 72 and change the water plan and what the steps are. So,
You know what you should do? Like they did many years ago with the lottery winners. There was a big lottery winning ticket and a commercial that showed lottery winners, and they made the kids come in and see the numbers, and they celebrated every single day. So you should do that with the signing of the SB 72. You should make a video and play it every day so that we see it, so we can relive the signing and celebrate the win. Just saying.
yeah, well, part of the legislation was to form an advisory committee that, you've heard me talk about this a lot. So the governor had a press release, which was great to get the governor's support behind this, because when the governor does a press release, it gets airtime. When DWR does a press release, it gets less airtime usually. So they were prepared to do a press release. The governor stepped in and said, oh, this needs to be a little bigger than that, and did his press release, which still included DWR's comments and Senator Caballero's comments on implementation of SB 72. So it was great. The advisory committee was announced. I've got paperwork if anyone wants to see. I was named on there. You'll be interested to know Heather Dyer is also on there. Shivaji is also on there. Orange County has a seat on there. Molten Niguel has a seat on there. So we have good representation. We also have some ag friends that are on there and some Northern California friends that are on there. So it's a little bigger than we thought it was going to be. We had hoped it'd be around 20 people. It's more like 35-ish. Bigger it gets, the more unwieldy it could get, but also potentially, there's a lot of important people that are on here, and them finding the time to participate on a monthly basis is going to be a challenge. And so in April, they'll pull the advisory committee together up in Sacramento, and we'll be talking about bylaws and the way it's going to function and what its role is going to be and how often it's going to meet and where it's going to meet and all that stuff. So
And
more
you're
to
on
come.
it, right? You're on it?
Yes.
Yeah, I'm on it.
Are we going to be able to watch those meetings?
Oh, I hope not. They are public meetings. I'm not sure how they're going to promote them, but they're definitely going to be public meetings. And then it's also going to break into what they're calling caucuses for local discussions, so that everyone doesn't have to go up to Sacramento to be heard. We can transfer that information that we hear down here. And we've suggested that the advisory committee members be assigned to local caucuses, so we can keep a continuity of messaging
Yeah, absolutely.
to present back to DWR. We'll see how that all shakes out. Right now, is it still right now, Michael and Sarah, the budget meeting? Right now, we did a call to action to our supporters of SB 72 because DWR was very happy to get $5.8 million in the January budget. They asked for $6.8 million and $3.4 million kind of going on forever. So they got cut $1 million, not just from 6.8 to 5.8, but from 3.4 to 2.4 going on. That has a significant potential impact into the schedule of getting all this work done. So we rallied our supporters to be up there today asking for full funding of the activity. The May revised budget will come out. That's what our target is. So that budget subcommittee is going on right now. We'll have representatives speaking on our behalf if they allow public comments. It's up to the committee chair to how that works. But I think we have quite a few people who have signed on to Senator Caballero generate a budget letter wanting full funding for her legislation. We and a lot of others from our coalition signed on to that letter, so that's good news. We'll see how it all shakes out, but a lot of work coming on that. A couple other quick things. We're working hard on a potential Aqua conference panel to talk about the changes in the water plan, and so collaborating with DWR on that. There's a lot going on with San Bernardino Valley and the water conservation program at Seven Oaks Dam, and trying to get FERO, weather forecast, reservoir operations with the Corps of Engineers and those pesky flood control agencies. So I met with Jason Yulee. The challenge at Seven Oaks is that all three flood control agencies are involved in releases from Seven Oaks. And the responsibility is Orange County's, because they're all part of the main stem project. And Seven Oaks has a huge role in protecting Prado Dam and Orange County. They work together. So I'm working with Jason and also with Orange County to try and move water conservation forward, so we have this pool of water that we get to hold at Seven Oaks. We have rights. Jerry was talking about water rights. Well, the 17-year fight that we had gave Western 98,000 acre-feet of water rights behind Seven Oaks Dam. Well, now we got to get the water there and get the Corps and the flood control agencies to hold it for us and release it when we need it. So lots going on. It's, these are one of those 20-year programs that you keep working away and chipping away at, and so we're still going. Had several meetings and conversations with Joel Metzger at DWR as he continues to push really hard for moving the water plan forward. We also, Mallory's not here, we had our first Santa Ana River Water Master meeting. So we have to have an annual report. All the water masters, Orange County, IUA, Western, and Valley District have to come up with a report to the court every single year on what happened on the flows. So we're going through that process. It's kind of fun, old school stuff where you get back to what they call scalping the river flows at the dams, cutting out base flow from storm flow. And so Mallory has to go through that process and do that. It is old school hydraulics and trying to figure out, how to divide those two. So there's a little bit of a competition, and I don't want to brag, but Mallory won, and our scalp was voted the best scalp by everyone submit ones. So it's kind of fun, but it's all part of the legal proceedings, and we have to be done with that in a couple of months. So we're well on our way to doing that. And that's about it. Be happy to answer any questions.
I have one, if I may.
Yes, absolutely.
Thank you. Craig, on the Colorado River trying to get some sort of settlement, there had been some saber rattling that USBR would step in and mandate something if the parties didn't reach agreement by Valentine's Day. Do we have any feel for what USBR is doing? Have they set a new date, or?
I haven't heard of a new date. It obviously didn't get settled, and they're driving a settlement. I don't think they don't want to make the decision. I think the general talk from everyone is that's going to make everyone unhappy if they have to come in and basically make a judgment like a court. So they would much prefer to have an agreed upon settlement between all of the basin states and Mexico. And so we're continuing to work hard on that. We, Metropolitan,
Right.
Not we, we're not at the table. Metropolitan is working really hard on that, and Metropolitan is working with the other right holders for California. So it's not just Metropolitan going in and saying, here's what we want to do. This is with the ag entities, the other right holders, and they're senior right holders to Metropolitan. So there's a lot going on. We hear Bill Hazenkamp kind of every week giving updates. We didn't talk to Shivaji about it the other night at dinner. I've talked to him about it offline. He's been going back to some of these meetings. It's just really hard. Nobody wants to give up water. And everyone wants everyone else to give up their water. And that's obviously not gonna happen. It's gonna have to be a shared resolution. I think the Bureau is trying to be really patient with that solution, but the pressure is on. You know, we saw a report at the managers meeting at Metropolitan that the recent storms in Colorado, you know, we had really nice storms that went through Colorado, that bumped them up to actually get to the worst year ever on Colorado hydrology. So we were below that, and that storm got us to, at least we're at the worst year ever.
We're tied?
We're tied with the worst. But what that means is the reservoir levels are gonna drop and drop faster. And so there's all sorts of predictions on where those are gonna go. But Bureau of Rec is going to lose patience because they have to protect the reservoirs and the power capabilities out of the reservoirs. And so, you know, the clock's ticking.
Yeah.
But I haven't heard like a new deadline yet.
No, and just to chime in on that conversation, I was in DC last week. Everybody's got an opinion on it. Michael and I went out with our lobbyists, who obviously had an opinion on this as well. So I would say that maybe at the next ComGov meeting, there might be something that you can get shared, because they're keeping their finger on the pulse of everything that's going on. But everything is still up in the air. And again, you ask any person on whatever side, and everybody's got an opinion, but
And
nothing
they're all
is-
wrong.
yeah, and nothing has come out yet, so.
They're all their own.
Yeah, it was a very interesting conference this last time. Some of the stuff that happened and the discussions that went on, so, yeah.
Thank you.
I would also add that there is a lot of conversation at Metropolitan about ways to accommodate different levels of results. So, you know, we don't have our head in the sand. You know, we're trying to think very carefully about, you know, it's probably pretty likely that they'll get a 200,000 acre foot a year reduction. How do we accommodate that? So we'll just have to wait and see.
Okay, thank you.
Okay, anyone else?
That's
No?
all.
Thank you, Mr. Miller. Good report, as always.
Wait, I have
Oh.
one more.
Oh,
We have a member of our staff, Derek, that is about to have a 20-year anniversary at Western.
oh my gosh, wow. That's exciting.
He was kind of shocked. He's like, what did I do?
Aw.
didn't even know. He thought he was only getting like 5.
Well, yeah, it just flies by. Wow. Okay, so now we'll move to director comments and requests. Is there a SAPA report, Mr.
There
Berger?
is. SALPA met yesterday, took one action, which was to close out Phase 3, which is the end, of the Water Energy Community Action Network, WECAN, which is a partnership with Riverside Public Utilities, the water side, to pay for a significant amount of conversion of turf grass to water resilient landscaping in Riverside's east side neighborhood, which kind of parallels both sides of University Avenue, going from downtown up toward UCR. It was a pretty successful program. There were some drawbacks to it. It is a poorer neighborhood, but a fairly significant number of homeowners. But people tend to be very protective of their property. Almost every residential property is fenced. Many of the gates are locked, And so they had some difficulty in contacting people to say, hey, we've got this free program if you're interested. But overall, it was a good program. They got some significant switchover from grass to water conserving landscaping, and it is now wrapped up. The other was, we had a workshop, first workshop on development of SAPA's strategic plan. The consultant came down from the Bay Area, and we had a really good discussion. They have interviewed all but 2 of the SAPA members. They've interviewed all 5 of the general managers of the 5-member agencies. And they are starting to put together better information on how they're going to structure a broader workshop with more participants. We did have participants from the United States Forest Service. We had Cleveland National Forest and San Bernardino National Forest represented. We had the Riverside County Flood Control was there, Jason Yulee himself, and he brought 2 or 3 staffers. And so it was a very good discussion, took quite a while. And the process is kicked off. We are hopeful to have something completed in roughly 6 months, but that timeline is variable depending on how much discussion comes out in succeeding workshops. So we'll see where we go from there, and that was it for SAPA.
Thank you for that. Metropolitan Water District?
So as Craig mentioned, we've had a lot of discussion about the budget, and when I was back in DC, we had a 3-hour workshop that I went to Met's DC office for over the budget. It was 77 slide deck.
A lot of slides.
A lot of slides and a lot of information. And just to point out exactly what Craig was talking about, one of the items is on the AV. And it talks about, and it showed us some of the property tax scenarios for this, right? So the current for the .007, and just to give you an estimate of what that is, it's about $70 on $1 million home of assessment. So that's what that percentage actually equals. The estimated tax collection for fiscal '28 is $425 million, which puts us at a rate increase of about 9.5%. So if we were to up the percentage to go to .009, which would make it about $90 of tax collection on $1 million home, which to us just sound, to me that sounds like ridiculous. Like, really, is this what we're, because that's such a small amount on such a large piece of property, right? But that puts us at $508 million collected, which drops the rate increases down to 7.5%. So it drops it down by 2%, which is pretty significant, okay? So we looked at some of the other possible scenarios, but really what it comes down to is the AV is collected for the state water project cost, for the fixed cost. And for us to get up to about what our state water project's cost is at the $570 million, it has to be at .0105. So we've still got room to be able to do that. We can't exceed what our state water project fixed costs are. So that would probably be about the level. But if we were to take it up to that level, just for instance, the rate increase would then go to 5.5%. So it's a significant chunk of money. And again, it's going to come down to how are we going to collect the rates? Water sales are down. These are fixed costs. This is going to get charged to us no matter what. So it comes down to a policy decision. It comes down to what do we look at for our credit ratings, for our cash flow? What do we look at for what our actual revenue versus expenditure costs are, and how we're going to balance all of those things. So this is going to be, I think, an interesting topic of discussion, because there are some people that think that this is the easiest thing to do to collect what our fixed costs are for a state water project. And then there's going to be some people that are going to push back. LA has pushed back in the past because they don't want their people to do that. I look at this as, this is probably the most equitable collection for taking care of the system that there is, because it's actual property owners. So you're not looking at renters having to pay this. So for equity's sake, for kind of spreading that out, the investment on the system, making sure that we're getting all those costs collected, I think is paramount to keeping our credit rating in play, to making sure that we're doing our appropriate collection of revenues versus our expenditures. So just a small portion of what I am looking at. Staff and I have been looking at, CFO has been having some interesting discussions, and we pour through their 1,300 pages of this is what we're working on this time workshop stuff. So it's a lot of information. And I mean, we could spend the 3 hours if you'd like me to cover this whole 77 slide deck thing if you'd like. But, we're working really hard on trying to figure out what's the path for us to take, what makes most sense. And then obviously pure water is always going to be a topic of discussion. At what level of participation do we want? It's something that we're putting money towards and committing money towards. We have grant obligations that are out there. There's about $150 million that are allocated in this budget for a project that hasn't yet been approved by the board. But a significant portion of that, I believe $100 million of that, is for grant funds and things that are coming from the state that don't have a repayment obligation, to my understanding. And so, we're talking about, do we want to, exhaust those funds before we do anything else? What's the level of participation? And then to general manager's position on budgeted positions requested by staffing, there's a certain percentage of positions. Some of those we kind of question and look at, because I think there was 8 positions that they had allocated for pure water. Is that correct? So why would we want to put 8 positions in and encumber the budget by added costs and liabilities for a project that hasn't yet been approved? So those are probably going to be removed, we would hope, out of the budget, because the timing isn't right. So maybe that's a discussion for later on down the road if we choose to go that way. And then, the other big projects that we look at for conveyance, we've got a lot of stuff going on the Colorado River to bring up all of the utilities and all of the power equipment that needs to be done. There's a significant impact that's going on for doing those improvements. So there's a lot of moving parts. So I'll keep you posted. I'm sure the CFO is sleeping with this under his pillow, just to absorb all of the things that are going on with this budget, because it's a significant dollar amount, and it's causing a lot of discussion to take place. So more to come. We're not anywhere close to being done yet. I'm sure there's going to be a lot of questions and a lot of vetting and a lot of discussion over what is the right things to put in and what's the right things to take out. So there you go.
I have a quick question. So the property tax, consideration of raising the property tax. So my understanding is that there's a certain cap because of what the maintenance is on the state water project. Is that true? Like it costs X amount of dollars?
Right, so that's
to maintain that
right.
infrastructure.
So we have a maximum threshold, and that's that 570 million of what our fixed costs are for state water projects. That is the ceiling.
Okay, so when we don't collect that in property taxes,
It gets used
where
with
does it come
rates.
from? Rates, okay, thank you. Any other questions? No? Okay, we will go on to Chino Basin Water Master. Mr. Gardner.
Thank you. Chino Basin Water Master has not met yet this month, but some significant things have happened. There was a lawsuit filed by City of Ontario against Water Master, saying that the dry year yield program, which is a MET program, was used improperly by a couple of members, and they claimed that they were economically damaged by it. The court said, no, you weren't either, the trial court. They took it to the appellate court. The appellate court said, Yeah, actually, you were. And two of the parties, Fontana Water Company and Cucamonga Valley Water Conservation District, withdrew some water from that program that they really shouldn't have been allowed to withdraw, and so they need to repay that. The actual cost has not been determined yet. Ontario was saying you need to do the entire calculation of everybody's contribution to funding the operation of Watermaster. And that went back to the trial court. The trial court ruled recently that that's not the case. They just have to redo, it's called the assessment package, to correct the errors for Fontana Water Company and Cucamonga Valley Water Conservation District. So that process has begun. We need to finish it by the end of this month and file it with the court. So that will happen. That's the big thing for the moment at Watermaster. City of Ontario tried to make it be much bigger than Watermaster thought it was, or most of the other parties thought it was. And as it turns out, as the trial court judge who got it back from the appellate court on remitter thought it was. So hopefully that will get resolved pretty quick. And that's Watermaster for this week.
Okay. And then CDA is tomorrow?
CDA meets tomorrow.
Okay, and how about RICRA?
Met last week. Then we had two action agenda items. One was an approval for a professional service contract with Berry Security Services. There have been a lot increased in trespassing after hours. Jurupa Community District had a trailer, and that was broken into a couple of times in like last 6 months. So we had to increase the budget for security. Yes, and we did that. And another item was receive and file fiscal year independent auditor's report and audited financial statements. We received the unmodified opinion, which is the cleanest of those. And then there was an operations update. Jesse Pompa gave an update from construction of the pump station, which is going very well. And then the biggest issue we see at RICRA plant is our odor complaints. And that has been, like years and years of complaints. And I really like that Grace Cardenas, she presented a report of how to do a community outreach strategy. And that was a great report. I think going in front of the community, talking to them, reaching out to them would be our best solutions, because we've tried everything at RICRA. And just, I'm like, I think in general, people have just complaints. If you go there, there aren't orders, but and there's a group of community members, 5 or 6 of them, they will just call in. And, so that has been a big issue. And I think that report was how to reach out and be in front of the community with these issues. I think and we have seen at, Western having that approach has given us a lot of, trust with the community. So I think that report was very good, and we look forward to seeing how it's going to impact, and I will bring that back here. And that was it. That was it for RICRA.
Okay, thank you. How about WRCOG?
WRCOG was a relatively easy meeting this last time. General manager and I both attended, so he provided his update from the TAC. I think we're probably in countdown mode. I think we have 3 meetings left before it turns over to Jackie Casillas over. Really? Really? Does it feel like it went fast for you?
Yeah, for me.
It did. It did.
It's 18 months, you guys. Oh my God. Okay. So it'll be turned over to Jackie Casillas from the city of Corona. So I'm sure she's looking forward to taking over, but we're in countdown. 3 more meetings to go. There was a change to the budget. We did some amendments to the budget to accommodate a couple of things that were going on. It was interesting too, while we're not affected by TUMF, there's been a dip in TUMF activity and some revenue collection, although I think it's more of a delay of the collection of some of the funds than anything else. So that was, that affects a lot of the cities and some of the things that are going on. And then we are continuing to march forward for our General Assembly, which again is scheduled for June 18th this year, with our keynote speaker this year as being Tony Hawk. So we're looking forward to having that. And then just as a reminder to my colleagues here, we are having the Women's History Month event that's being scheduled. We used to hold it here. The event has grown too large. It has outgrown our room here. And so Moreno Valley Event Center has, their conference center over there is graciously hosting that event this year. So if you are interested in attending, please let Tammy know so that you can do that. I unfortunately will not be able to attend that. I will be up at Metropolitan attending the board meeting on that day. So
What's the day of that one?
March 10th. Not that I know what that date
Oh,
is, but
that's
Craig and I
next
share
week.
that date on that
Oh,
birthday.
that's right.
So I'm missing that, so I'll be at Met. Maybe Craig can go for me instead and celebrate his birthday out there at the women's event. They'll have a cupcake for you. So that is all I have to report for WRCOG.
Okay.
So Sarah will meet next Tuesday, the first meeting of the year.
Okay, next Tuesday, and
I gotta place my bets.
you what?
We gotta place our bets.
On whether they'll really meet?
We have the agenda, I think it's happening.
It's a real.
It's a real,
It's a real thing.
yeah, it's a-
We've established a quorum.
And since we're on Sarah, I just want to mention that I spoke with Director Gardner, who has been the alternate on that board, and asked him if he would consider allowing me to be the alternate, because it's similar in nature to RCRA. And so that would be, even though Fazia is amazing and basically never misses a meeting, just in case, that would, it might be a little bit easier as far as being able to follow the knowledge, and not that Director Gardner, that didn't come out right, because that sounded like Director Gardner didn't know, but he does. Anyway, for convenience and streamlining, that is what I'm suggesting, and Director Gardner agreed. If we want to put it on agenda to have a vote on it, we can. Otherwise, we can just make the change, so.
I would just point out that Director Gardner gleefully agreed.
Okay.
Were you exhausted from all the meetings?
In the entire time that I held that position, which has been several years,
Yeah.
I needed to cover one meeting because Fazia was unable to. So she does a fantastic
Yeah,
job
She
of it.
does. She really
It's
does.
just, it's a long drive for me, and it's with caretaking at home, it becomes an extra
Yeah.
challenge. So this makes it easier for me, and
Okay, good.
Laura was interested, so I'm happy.
Yeah, okay, awesome. All right, the next report is for Aqua.
Yes, Aqua. So I attended the DC conference along with the CASA conference. And I have to tell you, attending this conference this last go-around, being in DC this last week, especially during State of the Union, was the bizarrest conference I've ever gone to. Okay. Well, one, the night that I came in to DC, it was snowing. So got off the plane, greeted with snow and sleet and rain. So that was really just lovely. And they closed down the offices. Everybody was told to stay home for the next day. So it was kind of an interesting week in DC. And then it was the State of the Union. I've never been back in DC during the State of the Union. And let me tell you, that town shut down. They closed streets off. National Guard dropped in. They put barricades up around the Capitol. They had motorcades that went by. We had a hard time coming back. We went to the watch party at BB&K's office that invited us to their office. It's the first time I got to go to DC's office for BB&K, so That was a very lovely event. So we got to meet with a lot of our colleagues and a lot of the individuals that were back there for the same program. So that was interesting. But it was really, it was just really interesting. And then with all of the activity going on and people having to attend the State of the Union, we had a lot of invitees that did not show. They just didn't show up to conference. So we had to do a lot of fills and a lot of different moving and shaking for that. You know, people that had tickets to go to that, there were a couple of people that I knew that had received an invitation to attend the State of the Union. You have to go for like 4 hours ahead of time. You got to get rid of your phone.
Yeah, you can't get
Yeah, it's no joke. It's no joke when you go back there. But, you know, the interesting thing was the next morning that you started walking around DC, because you saw all these barricades and all the streets glowed off and all this National Guard and Capitol Police and Secret Service and all these black SUVs that were around. You got up the next morning, it was gone. It was just crazy how they dropped in there and dropped out. It was really interesting. I was really fortunate. Michael and I went to go and meet with one of our legal representatives to have a conversation, and we were invited to the Metropolitan Club. And very exclusive club, very check your phone at the door, dress code, the whole bit. But one of the really cool things that happened at that event was one of the Medal of Honor recipients showed up. They were holding a reception for him, and we got to meet him, shake his hand, congratulate him, and thank him for his service for the military, which was a huge, huge honor. I've never got to meet one, and he was very, very gracious. Really just took a moment and didn't have to, because we were like nobodies that were hanging out. And we weren't invited to the reception, but we certainly took our opportunity as he walked in. So he was just a lovely human being. So I also was asked by CASA to be the moderator for a panel, so that was very interesting. I got to moderate the panel for the stakeholders' priorities and had a number of the stakeholders groups. We had the EPA that was on there. We had NACWA that was on there. So quite a few. It was an interesting panel to moderate, let's just put it that way, and their presentations and some of the things that they talked about and what they did. So all in all, it was an interesting couple of days for conference that has never really happened before. So kind of where we're at. And then Region 9 obviously is working on program for the conference, for spring conference up in Sacramento that'll take place in May. Craig has been asked to put together the panel and the direction on that to talk about SB 72. I know, so I know.
I know what Western's doing.
So, because it's kind of now what do we do? It's been signed, it's in. Now we have this huge lift to come up with 9 million acre feet by a target date, and now all of these parts need to make it all happen. So I think it's a perfect timing for conference, perfect timing. That's great that we're up in Sacramento. Hopefully we'll get some state legislators that'll be a part of that. I know that Assemblyman Jeff Gonzalez is asked to be, involved and see if he would love to come and attend conference. So hopefully, and he's on water parks and wildlife, right? So that would be a really good addition to that for the conversation. But other than that, I've been sitting home reorganizing my pantry.
Is it done yet?
No, it's still not done because I can't ever get home to get done.
So I think you shared with me an icebreaker that you did on your panel.
I did. So I always have to start my panels with, especially the panels that start after lunchtime, you got to grasp the audience, right? Because everybody is like, okay, we had lunch, and now we need to kind of shake everything up. So I threw a surpriser question in there, and it's always very funny at CASA because my question was, all right, do you pronounce it CASA or CASA, right? And so we had to do the little debate, and of course, the room just roared over it, because it's the north versus the south and how people say it, and.
What was the answer? How?
So we had a split on the panel. We did. We had a split on the panel.
Of course.
I'm a CASA,
Yeah.
right?
It's a casa. yeah.
Okay. But there were a couple of CASAs.
Yeah, people say casa.
It-
And it's like,
It's just strange, you know,
It's a taco or a taco.
right?
you know.
Something, so, but very, very entertaining. And I was happy to be the
thank you.
moderator and accommodate, so.
Yeah, I thought that was fun, so. Okay, we'll go to director comments. Let's see, okay, so that was Aqua, but that was probably a lot of your director comments. Director Gardner, do you have director comments? I have not. Okay, how about Director Torres?
I do, just short. I received comments and a couple of emails on social media. Oh my gosh, DMs about you. I guess Western participated in a Cal State San Bernardino like water forum or day. Is that right? Maybe it was a different. Maybe you're thinking West Valley. But, well, people had great things to say about it, so hopefully.
Yeah. It was like a
Awesome, okay.
science something on that. Yeah.
You know what, I love that, you don't micromanage, that's great. No, I heard great things about it, and so I wanted to say thank you. I always love hearing from my alma mater, so it was really good to hear that Western participated in that. And I got, like I said, about 6 different people say that it was a great event. And then I just wanted to wish my colleagues a happy Women's History Month. I think we stand out as a board, and Mike. And then happy Women's History Month to all of all the ladies in the room. And that's it. Those were my update.
Vice President Rizky,
I am good. I have nothing.
no comment?
It is an honor to serve with all you historic women.
Thank you, Mike. That's an, I do have something.
Okay. Director Denstead,
Okay.
yes.
So two things that I have. One, the Marietta Fireman's Barbecue is coming up. This is the second longest running event in Riverside County. So
Oh,
let's
wow.
be very clear about that. The only one that beats us is the Date Festival, and that's the only one that beats us in. This was stood up over 70-plus years ago for raising money for the volunteer fire department, which is now benefits a lot of different organizations that they promote and take care of now raising this, but it's hugely attended, so I didn't know if Western was gonna have a showing at this. Rancho and others have had booths at it in the past, so just kind of putting that out there, to have a presence at Fireman's Barbecue in Marietta. And then I was hit up by one of the council members down there, so I wanted to kind of put this on the radar for staff. If we've not been asked or approached, I have been. So Marietta is doing an expansion of their library. Why does that matter to us? Because, and it's a children's wing of the library that they're doing. And so, but if my colleagues are not familiar, we did come up with some funds of $25,000 to do a butterfly garden and a conservation garden outside of the library. So now they're looking to see if we can come up with additional funds to try to move it down. And I think they're talking about trying to do something like an edible garden or something like that. So I just kind of wanted to throw out there that I've been asked to come and have a conversation and wanted to not surprise anybody with that conversation and that ask. So it's officially out there. So, and that is all I have.
Okay. Hang on one second. Okay. First of all, I have a question and then I have one comment. Does sites count toward the 9 million acre feet of new water?
It depends on if it makes the plan or not, but it will very likely be part of the total.
Okay, I was curious.
But
Okay.
we were very careful not to call out projects. We
Right.
want a plan,
Right,
it would be a part of the plan.
okay, so I was just curious about
Yep.
that. And the other thing I want to say is, we've been working on, talking about SB 366 and then SB 72 and getting it through and the process that it is to make that happen and all the people that are involved in that, whether directly involved or indirectly covering things here when staff or when Craig have to be gone. It is quite a feat. And it's not easy. It's very difficult. It's very involved. It's a heavy load to carry. And then you get this load lifted when the bill gets signed. And it's just this incredible feeling that I think all of us have shared in some way, shape, or form. But to see Craig be able to be appointed to this advisory committee, that was like what is it, coup de grace, or whatever they say. It was just, I don't even know what that exactly means, but it just was, it was the icing on the cake. And with the partners that have been formed and the connections that have been formed because of this process, which was so long and sometimes very discouraging, it paid off. It's paying off. And California is actually going to have a water plan that means something. And I think all of us can be proud of that, and especially proud because our general manager was chosen to be part of that committee that is going to have a huge influence and input into the process. And so, Craig, I just want to say congratulations. I mean, good on you. Yeah, that was.
Well, I
Oh my gosh,
Thank
you're
you.
speechless.
Thank you, I know, but I want to turn it to how you started that. And it is because, you know, I think Western had a vision that we can do this. So the board has to let me do it. The board has to have a strategic mission to get it done. And then I have to have an amazing staff
Absolutely.
that covers everything.
Yep.
You know, not that I'm up there 100% of the time, but, you know, there's a big difference between being buried in the details here at Western and all of the work that it takes to hold a coalition together and drive it. And so, yeah, it's a village.
Yeah.
And, you know, and I mean, and getting all the other partners to get their boards to support it.
Yeah.
You know, it's like, you know, I get a lot, my name gets mentioned with it a lot. We have 200 partners and 25 funder agencies that did, you know, they did the work too.
Yeah.
And so it's an enormous movement, and, you know, I think it's important to do that. It's not, you know, this isn't Western just doing it, but if you guys wouldn't have said, let's do this,
Yeah.
we wouldn't have done this, and it wouldn't have been done. No one else was gonna do it. So, you know, you guys deserve a lot of credit.
Well, and I think that we all realize the importance to the whole state of California. This isn't just Riverside County or our region or our agency. This is the whole state that's going to be affected in such a good way from this. So, exciting, difficult process, but I think excuse me, the rewards are coming and they're being paid off.
Craig,
Yeah.
Craig Miller
Yeah.
for governor?
Yeah, I could go for that. So, do we have requests for any future agenda items? Anybody? Doesn't look like it. And there's one information item, labor and benefits expense budget to actual report. And then we are not having a closed session. Our next meeting is Wednesday, March 18th at 9:30 right here. And with that, we'll stand adjourned at 11:35.